Good evening, Ira Epstein with your SPDR ETF wrap-up, and this is for Tuesday, March 2nd, 2021, time about 6:05 p.m. Central Time. So as you can see, a very mixed board behind me. It looks like Christmas time, green and red, a little bit of everywhere, a couple of things unchanged, interesting. But market waiting on this week to see what the Fed chair is going to say on Thursday as he speaks again. Then we get the jobs data. There's just a lot of information coming out that the market's trying to deal with and trying to figure out what to do next. On the COVID scene, it's good. The president declared an enactment of defense for the U.S. where Merck is going to make from its competitor and for it, using their formula, the J&J vaccine, so that enough doses get out there. The good news is the president did say that by May, every American that wants to be vaccinated should have enough dosage to get it done. It's why he wants the J&J product, because it's a single shot. You get a lot more done with one dose. If we look at GameStop, you can see how this market is just sort of caught here. This craziness has come out of the market. It's still up from where it based out, though, 3 times the value. You realize that, because if you count that, the base, it really came from back here, even lower. And it went up. It never gave all that up, and now it's doubled or tripled again since it found a home for itself against that 100-day average, and that's what the green is, and it's staying here. The black line's the Bollinger Band. Staying over a Bollinger Band only occurs 5% of the time. However, the longer a market starts trading inside of it and going sideways, it's like a tube that you put a spring in and you keep winding it. It's going to break out one way or the other over time. We'll see. Trend up, bias up at a resistance point. AMC, trend up, bias up at an upper Bollinger Band resistance point. PAVE, trend up, watch this. Yep, higher lows, higher highs. This is that infrastructure stock. Market over the 18-day average, so the bias is up. You're at the resistance, you're fighting it. Don't you like seeing that Bollinger Band? I'm sure that if you're a regular viewer, you've learned something from it. Do me a favor, subscribe to this then. Put a like on it or a comment. Love it. It helps the algorithms for YouTube get me more viewers, which keeps me doing this. If this doesn't work for me, I just stop doing them. I've got a paid subscriber video that those are where I make my money. So this is the feed into that, if you will. All right. So as we look at this, and by the way, I am working on the enhanced version of my charting course where I dive only into Bollinger Bands with both embedded and non-embedded slow stochastic readings. So I'm far along on it. It'll be out very, very shortly. I probably spent my day today 5 hours on it. Over the weekend, 10 hours. So I'm working very hard getting that done now. I think it'll be a learning lesson for a lot of you. It'll be very inexpensive, too. I prefer you take the regular charting course first that we have, but you don't have to. Higher lows, higher highs, right up to the resistance point there. So fighting what? It is fighting the upper Bollinger Band. It is at resistance, and it's overbought. Probably a lot of money taking itself out of the market. Now, remember in PAVE, after a COVID bill gets done, you're hearing on both sides, somehow, some way, they're going to start addressing an infrastructure bill. Who pays for it, how it gets done, it's all beyond my pay grade. However, that's why PAVE has been on a move. Now, THCX looks to me like the downside correction may have run its course. You suddenly have higher lows, higher highs. That is not bullish, but it ended the bear run. Resistance is now at 2250. Even if this market fell straight down now to 1795, you'd have a higher high, lower low. It's easier to get bullish than bearish. Any close over 2250 does that, especially if momentum turns up, which is very oversold. In SMH, you tell me the battleground. If you don't see it, you should turn this video off. Is it not the 18-day average of closes? The trend is down. The market's staying under that number. It fights to get over. It gets thrown back. But it's unable to also add a lot of momentum and get down to the lower Bollinger Band. It's probably a window envelope in here that is supporting that market. A window envelope is a standard deviation from the 18-day average. Traders use them. I use them. I've seen on CNBC many of the traders there talk about them. I know Kramer uses it. I've seen him bring them up on his charts. And it's a popular tool. But the trick is there's an art in knowing where to place that line. I came up with that and I've never taught it. So maybe we'll do that down the road too. In any case, what you don't want to see on this chart is you have an outside day to the downside. I have a theory. If the high of an outside day is taken out within 2 trading sessions, it's called a bear trap. Bear because you made the higher high lower and low and closed lower, and that often leads to prices running to the closest of a Bollinger Band or a moving average above the market. In this case, all the averages would be below it, so it's 258.19. As of this time, I think the bears are going to be fairly aggressive here at 245.52, with stops over 250.05, looking for the hope of maybe the Bollinger Band or a window envelope, but that's what I think they're doing now. In XLI, notice how you've run into the buzzsaw at the upper Bollinger Band. This is to be expected. If you don't understand Bollinger Bands, you want to take what we're doing because it's an important tool. If you've seen how they work here, you know, they show up at key areas in the market as to what the market does with them. Right now, the trend is up. You're overbought. You've hit your upside targets. Let somebody else, in my opinion, carry the risk there. What about XLE? Well, you hit your upper bands. You backed off. You lost the Bollinger Band. Let me show you this right here. Did you gain it back the next day? No, you had to be back over 80 in both numbers. So as you're coming up here, and I know you're going to think I'm nuts on this, I think the pros are selling it short. I think they're putting a stop over that number, and they're hoping to get back to 46.27. That's what I think they're trying to get done. In the QQQ, the trend is down. You've hit your downside targets. You're getting bounces, and you're approaching in very oversold condition. Any reading under 30, is oversold. I don't think you're getting very aggressive want-to-sells there. They could be in place. I think that the bears are already in control. I think they don't want to see the market over 324.45, roughly $6 higher. And if you hit 313.32 again, I think they'd run for the hills, take money off the table. Let me come back here. Emerging markets, no trend. You have a higher high, lower low. Like the dollar that was bearish this year, that was the big trade, and emerging markets bullish. Both of these trades, ran out of steam in January, and since then they've been going the opposite of what the herd impact has been. No trend there. Gold is still in the bear camp, very oversold. Any move over 163.35 will negate this decline that's been in place since just about mid-January when you put in the lower highs, lower lows. Isn't it neat when you look at an 18-day average and you understand bias and you understand that the work that is coming up in technical indicators that filters bearish? People aren't looking to get long, they're looking to get short because of it. It sort of keeps you honest with everything. By the way, if you come back to this chart, look at the massive resistance at 174 that is shown. If the longer this market stays down there, those other moving averages will start chasing the 18-day average of closes to the downside. Gold miners are paying attention to the lower band. They are clearly in a downtrend. They keep making lower lows. You're getting a bounce, but I don't think you're going to attract new sellers when you're this oversold. If you do 33.57, if you get a rally, probably bring them out of the woodwork. TLT, you lost the embedded reading. I'm looking for higher prices. A short covering rally, not a trend change, could get up to the 18-day average. I don't think that Fed Chair Powell is going to come out and say anything that is less than dovish on Thursday. If you think he's going to be a hawk, okay. I'm seeing all the other Fed presidents, and they don't sound that way to me, but the trend is down. So I'm looking for just a bounce in a bear market, no more than that. I'm not being a hero picking a bottom. And in FXE, there's no trend. You're going from high to low. You lose your uptrend against the Bollinger Band. Exactly what I'm teaching in the course, how to play that, how to use the slow stochastic with it. So to get yourself ready, you might want to get our 2 brochures on Guide to Technical Indicators. You might also want to go out and sign yourself up for our charting course, which is on our website under the word education. Inexpensive, includes the charting software. All my research for 30 days is included in it. The values alone are about the price of the course from the software, my research that we put in there, and all the other features that we have. But you decide for yourself. You got to want to learn. www.iraepstein.com. For this brochure, just go to free offers, call my staff, they can take care of you. I'm Ira. I'll see you all tomorrow. Take care.